This is TechCrunch. Well, on Thursday, Anthropic released Opus 4.8, the newest version of its most advanced, publicly available model. Now, the model is available everywhere with standard pricing at the same level as the previous Opus release. This new model comes just 41 days after Opus 4.7 was released, a much faster upgrade cycle than is normal for Anthropic. The fast turnaround may have something to do with the chilly reception to Opus 4.7, which some users found disappointing. Now, that interval has also seen significant new releases for OpenAI's Codex and Google's Gemini Flash model, increasing the pressure on Anthropic to keep up the pace. Opus 4.8 comes with the expected best-in-class benchmark results, but there is also particular attention to how the model manages bad or uncertain data. In the launch post, Anthropic's early testers found that the new model is more likely to flag uncertainties about its work and less likely to make unsupported claims. Echoing that point, a testimonial from Bridgewater Associates said the biggest difference in the upgrade was Opus 4.8's tendency to proactively flag issues with the inputs and outputs of an analysis, something other models routinely missed and left to the users to catch. Together with the new model, Anthropic launched a feature called Dynamic Workflows, which will be available in Research Preview. The system is designed to help larger models like Opus manage complex tasks across hundreds of parallel subagents. So the post explains that Claude Code alongside Opus 4.8 can now carry out code-based scale migrations across hundreds of thousands of lines of code from kickoff to merge with the existing test suite as its bar. Anthropic is still holding back its most advanced Mythos model after a tentative preview last month raised cybersecurity concerns. However, the company hinted in Thursday's Opus release that the Mythos preview period might soon end once necessary safeguards are complete. The company said, "We're making swift progress on developing these safeguards and expect to be able to bring Mythos-class models to all our customers in the coming weeks." The most important market of the future could be in LLM tokens, and financial groups are rushing to build new infrastructure for them. China's Shanghai Futures Exchange is currently designing a derivatives market for AI tokens. That's according to a Reuters report. The news comes as major derivatives exchange CME Group and the Intercontinental Exchange, the owner of the New York Stock Exchange, have separately said they are working on launching futures contracts for renting GPUs. GPU markets are still maturing, but given the wide range of companies selling and renting GPUs, there's a robust market for spot prices on GPU rental, typically charged by the hour. According to data from AI Mining Company, which tracks daily GPU rental pricing across 28 marketplaces and cloud providers, median prices for NVIDIA H100 GPUs range from $1.40 to $4.27 per hour across 13 marketplaces, while the average price for H200 GPUs were between $2.34 and $5 per hour across 10 marketplaces. And just over the past 7 days, average H100 prices range from $2.79 to $3.33. But while mature markets exist for GPUs, there's less infrastructure around tokens themselves, the fundamental building blocks of contemporary AI models. Enterprise plans for major AI companies are commonly denominated in tokens. OpenAI, for example, charges $5 per million input tokens and $30 per million output tokens if you want to use the API for its latest GPT 5.5 model. Even cloud providers are increasingly offering the opportunity to charge per token, as in Amazon's Bedrock system. The effort comes amid an unprecedented build-out of AI infrastructure. Cloud service providers, private equity firms, and infrastructure players alike have poured hundreds of billions into building data centers, anticipating that demand for GPUs and compute will continue to rise. An emerging crop of global neo-cloud companies is also vying for a piece of this demand. Some of these new entrants are specializing, focusing on inference, while others are competing with cloud giants like Oracle, AWS, and Google Cloud to offer their services to AI companies. By targeting AI tokens, the Shanghai Exchange's derivative product would be tied to how AI companies price their services, giving businesses, investors, and data center operators a way to hedge against the cost of compute. That's all for now. This episode featured journalism by Russell Brandom and Ram Iyer. You can find more tech news at TechCrunch.com.